Classical Conversations presents Refining Rhetoric with CEO Robert Bortons, a podcast where faith, business, politics, and classical education meet. Join us as we use the classical tools of rhetoric to seek truth in every arena of life.
Welcome back to a exclusive in-studio interview with Will McCreery and myself, Robert Bortons. Will is one of our crypto Bitcoin gurus and helps with new business development and all sorts of different things inside the Classical Conversations ecosystem. And today we're going to be talking about Bitcoin as well as other cryptocurrencies and giving an update. As if you're a longtime listener, you probably remember Will had a regular portion of our podcast when we first got started, and we're morphing it now into more of a quarterly update segment. And so thank you for tuning in today. Of course, we'll go over some fundamentals, what's been going on in the crypto and Bitcoin space, and should be a very informative episode today. So, Will, welcome to the show.
Thanks, Robert. Appreciate being here.
Yeah, Will. So, first of all, just for those of us who may not have watched earlier episodes, tell us real quick, what is Bitcoin, and then what's the difference between Bitcoin and maybe cryptocurrency in general?
Sure, great question. Well, we like to start with those fundamentals. That's always helpful. So essentially, Bitcoin is I like to think of it as a block system. That's a decentralized ledger. So it's a system of transactions that are transparent. It's not owned by one central authority or nation state or government or entity. It's out there basically backed by a quantum system or the internet. So that type of transparency, and Lee likes to call it triple entry accounting, where you have a credit debit and then it's justified by the entirety of the internet. It's a very safe system in that way that cannot be regulated from the top down. Obviously, there's lots of manipulation in the market, as is in any market, but just having that decentralized platform and blockchain to go off of has brought a lot of value to a lot of people. And that's one of the many reasons we like it, right?
So kind of for those who are unaware, in 2008, there was the economic crash. I was just kind of getting out of college. Mm-hmm. There was kind of, I guess, a group of libertarian people who were kind of upset that the government started printing millions or billions of dollars and thought this is not, this isn't good, right? There was the gold standard in up into the 1970s that was taken off. Since then, we've seen income inequality just, really get really wide.
Right.
There's been a lot of, the price of housing has gone up. It's skyrocketed and all of these other things. And so some guy named Satoshi Nakamoto, I guess, started Bitcoin. So can you tell us a little bit, who is that person? Does he own a lot? Is he busy pumping Bitcoin and telling people about it?
Right. So Satoshi, that's a pseudonym name? It could be a group, or it could be one individual. Obviously, that individual or that entity, whoever set that up, is in charge of it and launched it, like you were saying, probably because of the economic conditions at the time. I believe he has not sold a large wallet that is in the name of Satoshi, which has probably brought some stability, especially in the early days, to the market. So not actively trading. It'll be interesting to see if that wallet moves. Of course, there's wild speculation and probably billions of dollars spent trying to figure out who Satoshi Nakamoto is or that group. But they're not actively, trading off of that account, which is worth billions, I'm sure.
Yeah. So for those who aren't familiar, so what is a wallet? Like obviously, I have a physical wallet with cash in it and credit cards and my ID. How does a Bitcoin wallet, relate to what we might carry in our back pocket?
Sure. So folks can think of it as a digital wallet, like you're saying. It's not physical; it's digital, and it's basically highly encrypted software, essentially at the forefront of it. So digital wallet, highly encrypted. You'll have your passkeys, so you access it. Right? Self custody is a term that's widely used in the any kind of cryptocurrency conversation. So that's essentially what it is: highly encrypted software where you can securely store your Bitcoin. That's what we're talking about, under your custody. You're in charge of it at the end of the day. There's a lot of people that have lost those keys and lost millions or billions of dollars over the years. But Yeah, that's kind of the name of the game. Self custody for deflationary assets.
Yeah. So we have those Apple iPod, tracker things that we put on our physical keys.
Right.
Like what do you mean people lost their keys? Like, is this something that they have physically, or what is a key to your Bitcoin wallet?
Sure, it'd be something like a passphrase or a number combination that you'd use for any kind of physical lock or digital lock. So certain key combinations that folks have different methods for storing those digital keys.
All right. So if you're not too familiar with the Bitcoin, or maybe you've read a little bit about it, how many Bitcoin are there, and how do they get generated, or how do they get released? Like, how do you gain Bitcoin, or how does more Bitcoin get released into the ecosystem?
Great question. So there are 21 million Bitcoin available and out there floating in the quantum mountain, or the internet, whatever you want to call it, the matrix. And it's my understanding that over 19 million of that has currently been mined. And that mining is a very complicated situation. But if we just kind of whittle it down a bit, there are computers that are figuring out mathematical problems. And once they figure out those puzzles, that becomes a block, and it's added to the ledger. So in that case, and we're going to talk about, I'm sure we'll touch on the deflationary nature of Bitcoin in a second, but we do have 2 more million in supply to add approximately. But overall, that supply has been released to the public, to the world. And the miners, there's a lot of companies out there that specialize in servers and have a portion of quantum already under their control, and they do a lot of mining. There's people at home that do mining. You're a Bitcoin miner, I found out recently, which is exciting for you.
We'll put the link to the Heatbit miner in
the there we
notes,
go.
so
there we go.
I can get 5% if you buy one.
I want one.
So deflationary nature of Bitcoin. So we have 19 million, 21 million out available eventually. I think 2140 or something.
Yeah, something like that.
2145 will be the last one that will be mined.
Yep.
So there's a cyclical nature of Bitcoin, and that's around something called the halving. So what is the Bitcoin halving, and how does that relate to mining and the amount of Bitcoin that are out there?
Sure. So my understanding is there's that halving cycle. It happens approximately every 4 years or 4.3 years. And that has to do with the mathematical equations behind the supply that we've been talking about. So currently, what is that halving rate? Is it 6?
Every 10 minutes, there's
a block is coming
I think
out.
There is 6.5, 2 years ago, and then March of 2024, it got cut in half.
3.25.
3.25, and then March, or no, I guess it'd be sometime May or June of 28, I guess, would be the next halving, when it would go from 3.25 to
1.6. Yeah,
some change.
Yep.
How does the Bitcoin supply relate to price? What have we seen historically?
Well, this plays right into the cycle that you're talking about. So that halving cycle, and whenever you have an asset that's where the supply is cut in half like that, generally, inflation and deflation are based on your supply. So an inflationary asset is where the supply changes, right? Quite dramatically. We've seen that in America recently. We see that across the world. So when you have an asset like this, which you can think of it as a commodity, Michael Saylor, one of the biggest voices out there, proponents of Bitcoin, likes to talk about that a lot. When that supply is limited to the 21 million, and the supply of that remaining 2 million that we're working on gets cut in half, and it gets harder for computers to find those algorithms, that basically can be seen as a supply cut. And that goes into the characteristics of a deflationary asset. So the price generally rises for 2 years. We call that a bull market in finance. And then when that bear comes in, it levels out. So whenever that happens, generally 6 months after that halving cycle, the market catches up, realizes that, oh, wow, the supply of what was flowing into Bitcoin and what was readily available is cut in half. And generally the price of the dollar to Bitcoin rises against it. And the price of any valuable commodity against Bitcoin, rises.
Yeah.
So it's just the cyclical nature of what we've seen for the last few years.
Yeah. So like one of the differences between Bitcoin and gold, if the price of gold, is at $3,000, right? And you have a gold mining company, we probably need to get it out of the ground for something less than that, say $2,500. So if you can't get it gold out of the ground for $2,500 to be able to make a decent profit, you're not mining. But if suddenly the gold goes up to $4,000, well, now you can spend $3,500 to get it out,
right,
and still make a profit. So you can dig deeper, hire more people, get better tools and technology. But for Bitcoin, no matter how many people are trying to mine it or what the price is, it's got a fixed distribution phase.
right. Yep.
And so you mentioned Michael Saylor. He was the MicroStrategies was the company name. Now it's just Strategies. He's kind of the Bitcoin evangelist, if you would. Basically, what happened, 2020 happens. He realizes they have a very successful company. Just kind of like $250 million company making $50 million of profit a year, but he can't really make it any bigger. Like that's kind of the market saturation
for his life cycle. Yep.
For his company. And so suddenly inflation hits, 10%, 15%. Some of us think it was much higher than that. And so he basically is seeing, his life work evaporate in front of his eyes because the money in his bank account each year is getting worth less and less. And he has a fiduciary duty to his, shareholders to try to make the company worth more and more.
Yep.
So tell us a little bit about the process that he went through back then.
Yeah, he had an awakening, like you're saying, and kind of going, where do I store capital? How do I keep providing value? He's a big value guy, and I love his perspective on what value is and where to go for it. And he started converting a lot of that value, right, from strategies straight into Bitcoin, becoming that big proponent, and going, wow, where can I find a commodity that's deflationary like this? And he looked out, and I didn't realize this until a few days ago, but the US government has cheese as a commodity, billions, I think they said 73 billion in cheese or whatever.
But the supply can change.
Yeah. So, I mean, at the basis of his decision was based off of supply and realizing that, hey, if there's a fixed supply or a decreasing supply, that's a deflationary asset. Bitcoin's not decreasing, right? That 21 million won't decrease or get burned for someone who knows that term in cryptocurrency. But as far as energy storage, he talks about a lot of energy as well. We're moving into a digital age where the conservation of energy and control of energy is crucial. And he just said, hey, I'm looking over the digital landscape. My Web2 company is, running out of steam. Our life cycle is, we're almost through our life cycle. What seems to be birthing on the digital stage. And to him, that was Bitcoin, as a moving, living organism, if you will, and as a digital commodity. And boy, has his life changed, and he's changed, the lives of a lot of people just through educating them.
Yeah.
So it's been exciting to see that.
I guess full disclosure, I should say that I own strategy stock. But yes. Did I buy it at a good time? Probably not. But anyways, yeah. So basically, he took a $50 million company, which was on, I think, a very $250 million company, good sized company, right? $50 million, but very small compared to like the list of the stock market.
Yeah,
like nobody was 401k was changing based on how MicroStrategy stock was doing.
Right.
And now he's listed on the S&P 500 because he's been able to really increase that value super quickly. So it's been pretty cool. Now he's going around, he's trying to talk other, Fortune 500 companies and stock companies to buy him. He's talking to nation states and trying them to invest.
He's on the Hill now.
Yeah. So he's on the
cabinet.
Hill. Yep. Yeah. So tell us, there was recently Donald Trump gets elected. I was on a live stream with Cross Politic doing election night podcast with them.
Yep.
And Bitcoin jumps like $5,000 or something like that, at 11 o'clock that night. And I said, Donald Trump has won the presidency. And of course, nothing had, come through or been announced. Although it was, looking favorable at that point for sure. And everyone's like, how do you know that? If somebody said something, I was like, Bitcoin just jumped.
Leading indicator.
Leading indicator for sure. Yeah. So 8 years prior to that, the betting markets kind of showed Trump was going to win. I was not partaking in that, but I did have some Bitcoin. So that takes off. Bitcoin runs. It was kind of at a $68,000 or so high. The previous bull run crashes down to around 15,000, give or take. Trump gets elected. I think it's around 44, jumps to like 48 or something that night. Hits 109,000 earlier this year, January. Today, as a recording, it's been bouncing around between 80 and 82,000. But just a couple weeks ago, we start getting these executive orders, and then there was a crypto summit at the White House. So so tell us, like, what is happening legislatively on the national level? Is there anything happening at the state level?
Yeah, absolutely. So March 7th, we had our first annual crypto summit, right? We've never had that before at the White House. So what an exciting event for people who are interested in the industry to see that come about. And my understanding of that event is they had a lot of world leaders in the industry, right? Come to the White House. Michael Saylor was in attendance along with a lot of other CEOs. And O'Brien Armstrong was there, CEO of Coinbase and the CEO of Ripple, Brad Garlinghouse, and a huge roundtable. The Gemini twins and a lot of people that would be recognized were there.
Yeah.
And there's just a lot of, conversation, what would this look like to have a Bitcoin strategic reserve? So they're talking about a reserve. This is new. Trump is great, in my opinion, as he doesn't want to pass along, right, our tax money and put it into it. He wants people saving more cash than spending. So it was a creative summit. I think people were really hoping to get more favorable news, those who are in the industry. But as a result, the first step was, hey, for the coins that we've confiscated, right, as the U.S. government, and I believe
from criminals,
usually fraudulent activities. What do we do with this? The U.S. government, my understanding is they have been selling it every quarter, large portions of it, and that cost the average tax buyer, I think it was $758 billion over the last 3 years or something ridiculous of value lost. So that figure was thrown around quite a bit.
They sell it at 15,000 and now it's 80,000. If they had held on to it, it'd be worth 4 times or 5 times whatever that multiple is,
right,
versus what it is. And it's historically it's been increasing about 40 or 50% a year on average. Now that's obviously we have ups and downs based on the cycles, and that number is what they call diminishing returns. Is a little bit that, but you said a word, crypto, and we had been talking about Bitcoin. So can you just kind of, what is the difference between crypto and Bitcoin?
That's a good question. Bitcoin was the first of the party, right? It was one of the first, largely accepted blockchains. But cryptocurrency is anything that lives on a blockchain, and they're just defined and operate differently, right? They have different payment rails, if you will. A lot of them are centralized. They have different regulations, and they're built into the banking system or built into a commodity system. So Bitcoin is exclusively decentralized, right? We talked about that a little bit at the beginning, and that's basically the nature of those rails separates Bitcoin from a lot of different cryptocurrencies that are out there. The Classical Learning Cohort is comprised of small groups of CC parents learning how to become more confident, competent classical teachers. We provide a welcoming place of mentorship while practicing classical skills and hospitable assessment. With feedback from peers and mentors, you will experience transformational growth as a classical Christian educator. Why not sample the CLC by attending a free online event with a CLC member? Go to classicalconversations.com/cohort and search Experience a CLC event to find a time that fits your schedule.
So crypto is basically it's a technology, and Bitcoin's a brand. And let's call it like store of gold. It's kind of like a gold storage almost online, versus some of these other cryptos are programs like you think like Google Chrome or Internet Explorer or those type of concepts. They're almost application layers. And so those, some of those, there's thousands of those. Some of them have been successful. Some of them are what they call rug pulls, where a person puts them out there, makes a bunch of money personally, dumps theirs. Basically everyone else is left holding the bag, and they're scams. And so there's that aspect of it. But I think there's some pretty cool opportunities though in crypto to streamline some things. One of those things, as you mentioned, was banking. So there's this regulation called ISO 20022, and it's basically a way for banks to talk to each other. Bank of America settle stuff with Wells Fargo, or settle stuff with Deutschland Bank over in Germany, or the Chinese central bank.
Yes.
And so they all need a way of talking to each other and trusting each other. So what is ISO 222, and how does that apply to crypto?
Great question. So ISO 20022 is a protocol, basically, like you were saying. And the banks all have to have the same protocol to speak to each other, to settle large payments, as you were describing. And the current rails are very outdated. So this was, 3 years ago. ISO was just, was the thought, could we streamline payments and make settlements not be 3.5%? What would it look like if it was, faster, smarter, greater, with a faster data rate, basically, and that goes into the speed of energy, the speed of money, the speed of everything like that. So it was a dream 3 years ago. And then this year it was got to a place where they were, hey, let's implement it, which was supposed to be March 10th of this year. Only 12
3 days ago.
% of the banks answered the Federal Reserve's call to be ready for it. So the Reserve was absolutely furious, going, hey, you guys didn't get your act together. Why are we doing this? They can save 2% on payments by resorting to this new protocol. And that's what they're aiming to do this year. So the new date is July 21st. All the banks in America are supposed to be on that protocol with their rails ready to go. So they did extend that a little bit, but it should speed up payments.
Reminds me of Obamacare when they were first putting it in. They're like, you had to have it by this date, and then this date, and then this date, and then this date. And it's just like a super pain.
Ever revolving door. Yep.
So I think, a lot of people aren't business owners, might not be aware. So a couple of things, like every time you take a credit card as a business owner, Visa or MasterCard or American Express basically get 3%. So if you put $100 on your credit card at Kroger's, $3 of that is going to whatever credit card company you own, and that's to run this. The other thing people don't understand, like when money was first being, like in the United States, like they had those carriages. And so if they had a bank in New York and there was a bank in Missouri, they had to literally put gold on a, and move it over there and have hired people and all sorts of stuff like that. And
the original Wells Fargo system, right?
Yeah. So, and that was obviously very expensive to operate. Now, if I send you money on Venmo or something, you're going to see it 10 seconds later, but it actually doesn't work that way behind the scenes. All of that liquidity, that's part of the reason there's those fees, is actually going to take your bank 3, 4, 5 days to actually get that money from my bank. I think about 3 days. But at the meantime, you're allowed to spend it right away.
On credit, yeah.
So how does crypto solve that problem?
So that's a great question. This protocol is famous for 4 seconds. So it has eliminated the 3 to 5 day process. All of us have seen that. Notice, right? Hey, you get your ACH or your payment 3 to 5 business days. It's narrowed that down to 4-second transfer of real world assets over that protocol. So that protocol isn't a cryptocurrency itself. That's not what we're saying. But it's a technology that makes the transfer from your bank to my bank happen almost instantaneously. And that's going to change a lot of things for a lot of people.
Yeah, I mean, as a business owner, you're almost like a typical business. If you're making a 10% profit at the end of the year, that's pretty good.
Yep.
Well, you got to figure if the credit card companies are taking 3%, I mean, they're basically taking a third of your profit. It's
an incredible way to think of it.
The federal government's taking 40% of your profit. So, you basically, you're working for the federal government and credit card companies as what most small businesses are doing. And this can really fix that problem in a big way.
Well said. Yeah, that 3.5 doesn't look bad initially, but at the end of the day, you're right. For a small business owner.
Yeah, absolutely.
Big cut of your profit.
So what coins are ISO, or do you know what coins in America are ISO 222? That maybe a listener should check out. This is obviously not investment advice. Some of these I own, some of these I do not. But yeah, which ones are ISO compliant?
The top 4 would be XRP Ripple. So they set out to develop their cryptocurrency with a very secure blockchain with ISO, this protocol in mind. Now they started this, when did they start this? 2014, a long time ago. So definitely after the inception of Bitcoin. And they just built Rails specifically for banks to solve that problem. I mean, if you're putting 30% back in the pocket of business owners, how great is that for the economy and for America? So I've really appreciated following that company. I really like Brad Garlinghouse. Their leadership seems to really have it together, and we'll see how successful they are. They've partnered with Visa and Bank of America and some of the larger institutions in America and around the world, which is awesome. So they're positioned well. We also have XLM. Stellar has had a lot of the same things. They set out to be a bank partner, develop that protocol. We also have HBAR, Hedera, which people may have heard about. I bet that's a top 12 coin right now in market cap. And Quant is another one. Quant more so, it's set up to be part of banking, but they want to transfer a lot of commodities across the banking system. So I think there's a few more, but those would be the 4 largest to look out for. Those coins were exclusively made by American companies here. I know Trump's administration has, taken an interest in a couple of them. So it's exciting to see what happens.
Yeah, I know when Bitcoin first was launched, a lot of people said it was being used by criminals, and those were low-level criminals. Now it's being used by the high-level criminals, the ones that have acceptable crimes. So we're wrapping up our time together. So where are we right now in the kind of Bitcoin cycle? How does that relate to these different cryptocurrencies? Like if someone we did an episode a while ago just showing if you dollar cost average, just put, $5 a weekend or $25 a weekend, like how that over time can really build up and how that's good.
Right.
But that doesn't necessarily, we started doing that at the top last cycle. Luckily we didn't stop when it was going down. So that helped us a lot where we are today, even at, a 30% drop from the top. We're still good. But yeah, where are we right now? What can we expect over the next couple of years?
Absolutely. Well, going along with your halving cycles earlier, we got 2 years where the price has generally been down so far, and then 2 years where it's been an upswing. We're on the back end of an upswing. Without being too technical, it's probably about 80% through the bull run. Where there's some delays and some things economically that have maybe extended it an extra 3 months. We're on the back end, and we'll see what happens. There's supposed to be an adoption phase, just like the internet was adopted, right? Late 90s, early 2000s, where things, hey, all of a sudden we're here to stay. We don't believe we're at that point yet, so I believe the cycles will continue to happen where we're high and then low. But the good thing about Bitcoin is it's always growing. So when you're talking about dollar cost averaging, Michael Saylor talks about it a lot. He's like, hey, if you consistently buy and you write out the volatility, most people don't understand that Bitcoin's still growing at 42% a year. But it takes some time because like you said, like you bought the top. I've definitely bought at the wrong time as well over and over again. But that consistency for people who are patient and consistently buying this deflationary asset, their bags over time are growing at, or their account, their value is growing at 42% a year, which there's not, what does your 401k grow at? 9.2% if you're having an average year. So that's 400% over other, growing assets out there, which is really exciting. And as a lot of people were saying at that summit, we're past the speculation phase, right now. And they're more so seeing this as an economic tool.
Then it drops 20%. So.
Exactly.
So what is your prediction? What do you think we had an all-time high earlier this year, about 109,000, give or take, dropped back down to, like I said, 80,000 today. Who knows what it is when you're watching this? Today's March 13th. Okay, what is your prediction? Like, what do you think the all-time high will be? Have we hit the all-time high in 2025? Do you think we'll see a new all-time high? Like, when do you think that would be? And then if nations and like the US starts investing in it, like are these cycles, is the cycle theory of, kind of like you said, 2 years down, 2 years up, is that going to continue? I guess if we're wrapping up the 2-year high, we should expect a 2-year low if that continues. Yeah. So what is 25? What do you think 26 looks like?
Good question. I'd love to hear your perspective on it as well. I don't think we've hit the all-time high yet for this bull cycle. We'll see what happens. There's a lot of economic components that are playing into this. Quantitative easing is coming into play. Interest rates should be dropping in the next, 6 months. M2 money supply is coming up quickly. So I do think we're going to have a good couple of months here. Not financial advice. Do not invest on this, but I think we'll have a little bit of an upswing. Generally, there's a summer lull for markets. There's that catchphrase, sell in May and go away. June, July, August are usually terrible. And then with adoption, ETFs, as we've talked about a lot on the podcasts, are out there, and BlackRock and other large organizations are buying. So I believe my personal prediction is we top out somewhere between 120, maybe touch off 135 Q3 before it just starts going down into a smaller lull. I do think it'll lull, that crypto cycle continuing. I think it will continue. I don't think we'll have as dramatic swings moving into the future as things get adopted. But I think we'll see Bitcoin start pulling away. Bitcoin in the top market, the top coins with utility, start pulling away, having less volatility. And then everything that's a part of this adoption, that's not a part of that adoption phase, will start going away.
Historically speaking, we should see an all-time low, not an all-time low, but a low for the upcoming cycle sometime in 2026. Probably towards the end of it. So what price point, what do you think, what's the lowest point Bitcoin will be in 2026?
Great question. Well, if we hit 120 to 130 this fall, I think Bitcoin could fall by 50% probably towards the end of 2026. Now, last cycle, under an administration that was not supportive of Bitcoin, it fell 80%. And that was without adoption, without ETFs, all of that. I don't think that's in the cards anymore. So I'm thinking it could fall if it hits 120, probably range about 50 to 75,000 is my prediction for the next lull, which is, from a financial standpoint, sounds terrible, but we should be celebrating that, anyone who's interested in this. But what do you think about all that? What's your
2025?
What's it going to top out at?
Well, if you had asked me in 2024, my top for 2025 was around 120.
Smart.
I got very excited. I've talked to a lot of people about the different adoptions and things like that. Yeah. Obviously, I got into the maybe 250 camp, maybe even higher than that.
Sure.
I don't know. I'm a little bit more bullish than you. I think, and obviously it's going to depend on the economy, but if we get interest rate cuts later this year, some of this early chaos dies down, which I think is intentional, that, we could still see 150 to 180 Bitcoin this year. I'm definitely going to think about dollar cost averaging out and then holding, but we'll see. I obviously won't sell all of it, but maybe 25 or 50% of my holdings, and then trying to dollar cost average back in 2026. So I think
strategic.
We'll see if I can pull it off. Had good plans before, and then I didn't execute them. But yeah, I think for 2026, I'd probably see a low, potentially kind of on the low side, maybe like a 38,000.
Sure.
But obviously, if we see legislation where the U.S. government starts buying, then you could see a scenario where we pass 100,000 and never see a 5-digit Bitcoin again.
Yeah,
so
absolutely.
It's a wild ride. Let me just put it that way. And do not invest any money. If you invest money, consider it going to zero. It doesn't exist.
Absolutely.
Don't leave money on crypto exchanges. Don't leave out your passcodes. Get a cold storage wallet. All sorts of great things to do. So, Well, Will, thank you so much for being on today's show. Thank you, listeners. I hope it was informative, that you got caught up on where we are on this Bitcoin cycle, learned a little bit about what the difference is between Bitcoin and crypto currencies, and how the technology of crypto, I think, is going to be integrated into our future regardless. And so it's a good reason for us to learn it today. So be
Absolutely.
sure to share this episode with a friend. None of this was financial advice, and Will and I probably own almost everything that you heard here today for full disclosure and transparency. And both of us think it's going to all crash in 2026. So, thank you so much for tuning in. Be sure to share this episode with a friend and tune in next week to another exciting episode of Refining Rhetoric.
Thank you for listening to Refining Rhetoric with Robert Bortons. Want more? Make sure to subscribe so you won't miss an episode. You can also follow us on social media to continue the conversation, and visit classicalconversations.com/rhetoric to find out how you can join a local homeschool community.